How's it going, everyone? It's Sam. We are going to take a look at a key indicator that has shown a market crash in the past, back in 2000, back in 2008. And we're going to take a look at it today because it just flashed for a new market crash. Now, I'm going to take a look and tell you why I think this time might be different. So I'm going to explain what this means and why it's happening right now. Of course, though, as always, I don't have a crystal ball. I'm going to tell you what I'm doing at the end, but I don't have a crystal ball. I can't tell you what's coming in the future. I'm not a financial advisor, so always do your own research. Now, if you guys don't mind just hitting the like button, I know there are going to be tons of people that take a look at the title and just dislike it right away. So if you guys don't mind hitting that like button, I do appreciate it. Please hit subscribe if you haven't done that already, because we don't only look at the good, we look at some indicators for the bad too on this channel. Also, if you guys want, you can try out Webull down below. Just deposit $5 on their platform and you can get the chance to get up to $2,300. It's a new reward for new users. And if you guys want, there is a link down there to BlockFI to get an interest rate on your cryptocurrencies today and get a bonus up to $250. So definitely check that out down below. Now, let's take a look at this key indicator. So on top, we have money. We have the S&P 500, the cost of the S&P 500, and they're saying money-losing companies have flooded the secondary market. So net amount of secondary or add-on share offerings from profitable versus unprofitable companies. So this is a rolling 12-month. So basically what's happening now is there are more unprofitable companies that are putting secondary share offerings out there. They're just putting more shares out on the market after they've already gone public. Now, this has happened in the past. Back in 2000, we had this happen and we saw a massive decline years later. From here, you can see 2008, we saw a massive decline. Now, we're around zero again, which we've only seen that a couple times. And now people are expecting a massive downturn pretty soon after this. So, is now the time to be fearful? You know, when you look at this right away, you start thinking, oh man, like this means that the stock market's going to crash. There's nothing we can do. But once you start thinking about it a little bit more, you start thinking, okay, why would more unprofitable companies be throwing out shares? Why is this happening? What companies are doing this? What's it look like overall? You know, how does this change the outlook of the market overall? Why is this happening? So diving a little bit deeper into this, there are companies, and I've known a lot of them, I've talked about a lot of them, that are unprofitable, that are putting a lot of shares out there. So let's take a look at why they might be doing this. We have Senseonics, which went up to $4, actually all the way up to $5.50 from about 40 cents. They have raised cash several times. BNGO went from 52 cents, 50 cents, all the way up to $6.30 now, but it went all the way up to $16. We have NNDM, which went from $1.68 all the way up to $16. They raised cash a lot. They raised $1.5 billion along the way here. So there are a lot of companies like these that are unprofitable that were adding and adding and adding shares to the market. They were increasing their purchasing power as a company. And this has become almost like a new thing to do in the market, where if you go up dramatically, you just start selling shares and selling shares and selling shares. I had never seen something like this before, where so many companies were doing it around the same time. But if you look at these companies like BNGO, like Sense, a lot of them were in the same market, right? They were in the biotech market, and they were doing it around the same time because the whole market was going up drastically. I mean, we're talking about 1,000% gains in months. So it only made sense for them to do this. They went from a $100 million company to being able to add hundreds of millions of dollars to their balance sheet. So what if you had a company that was worth, $100,000, and then someone said, no, it's actually worth $1 million. And then you went out and sold some extra shares, so you had $300,000 in cash. It just makes sense as a company. The other thing that happened is we came out of a pandemic. So a lot of people, a lot of companies that were unprofitable realized, hey, maybe we should raise some cash just in case. A lot more companies are being cautious right now. And that's something that doesn't show up on this right here. Also, there are a lot of companies that decreased profitability over the pandemic. Like a lot of them had a really rough time during the pandemic. So it makes sense, hey, maybe some companies went from green to red. A lot of big airline companies, a lot of other companies that were hit hard by the pandemic were hit very hard, and now they're not profitable, at least short term. The other thing is the interest rates are very low right now. Like, look, they're essentially zero. The federal funds rate is near zero. So if we look back in 2008, it happened around then too. It happened right after 2000. So the thing is, money is very cheap. A lot of these companies go up pretty drastically. Like the higher risk reward plays go up drastically when the federal funds rate is low. It's cheaper to get money. It's cheaper to access money. So growth stocks usually take off when rates go back up. Companies like banks or REITs or companies with stable cash flows typically are valued much higher. So right now, federal funds rate is really low. This is something that we knew. That's something that we didn't need an indicator for to know that if the Fed starts raising rates, that the S&P 500 and other growth stocks are going to go down. Now, does this mean that we shouldn't pay attention at all? No, I think we should pay attention to this. I think this is something that's really interesting, and I think it's something we need to pay attention to. But it also means that, hey, maybe this isn't the end-all be-all. We are in a different situation. No year on here has had a pandemic on this chart, right? We haven't had any pandemics from 1982 to now. So this time might be different. Indicators are indicators for a reason, but they don't necessarily always show what's going to happen in the future. Things change, right? We see drops, but there are only two of them on here, right? Over 40 years, this indicator has happened back here a good amount of time, and we still saw the market go up. So overall, something that I think we should pay attention to. It means that there are a lot of unprofitable companies out there. One other thing is, ARK Invest talks about this all the time, companies should be reinvesting in themselves, right? This is a time of growth. This is a time to reinvest in yourself, not to take profits right now, but to constantly push forward, right? Push innovation forward, continue to reinvest in the company. Now, of course, like I said, I could always be wrong. I'm not a financial advisor. I'm not a stock analyst or anything like that. So always do your own research. This is just something that I found quite interesting. I've seen one or two videos being made on it. I've seen it on Twitter, and I think it's something that we should take a look at. Someone reached out to me about this on the Patreon. If you guys want to see the Patreon and check it out, try it out, you can check it out down below with the video. You see exactly what I buy and sell on a daily basis, along with answering different questions, along with giving market updates every single day. Now, thank you guys so much for watching this. You can check out the link down below to Webull to get some free stocks very cheaply. Just throw $5 in there, just throw some cash in the account and get some free money. Also, there's a link down there to BlockFI in case you want an interest rate on your cryptocurrencies, like I said before, and you get a bonus for signing up and depositing a certain amount of money. Thank you guys, and I'll see you in the next video. Bye.